Hey, my investing friends! It's time for our August income update of our $124,000 Tfsa dividend growth portfolio. Let's do this! First, let's look at our portfolio's dividend calendar for those new to the channel. January, April, July, and October are the big months. February, May, August, and November are the smaller months. And March, June, September, and December land somewhere in the middle. In August, we receive dividends from the following 4 monthly payers. We'll go through each paycheck we received, adding up our totals along the way, starting with the smallest payer, not paycheck. Our smallest paycheck in August was $23 from Canoe EIT Income Fund. It provides us with 3.5% of our yearly dividend income. EIT has a great 5 and 10-year total return. The portfolio is a good blend between financials, energy, industrials, healthcare, and materials, making up 84% of the portfolio. Tourmaline Oil Corp and ARC Resources make up the 2 largest positions in the portfolio. Next, First National Financial paid us $50.40. It provides us with 7.7% of our annual dividend income. It has a yield of 6.4% currently, compared to its 5-year average of 5.8%. It has a 5-year CAGR on its dividend of 5.3% and has a dividend growth streak of 11 years. It has a very sustainable payout ratio of 67% as of Q2 earnings. In the event we have a soft landing with the economy in Canada, I can see First National having excess capital that would be returned to shareholders in December, as they have done in 5 of the last 6 years. After 2 paychecks, we're at $83.40. But before we look at our next dividend paycheck, we're excited to tell you about the soft launch of moomoo Canada. Think Yahoo Finance meets brokerage, but on steroids. One feature I really like is the very comprehensive stock screener, as you can see here. And it's great for paper trading for those new to investing. If you're like me and like free, sign up to moomoo with my link below and have the chance at winning some amazing giveaways like a $100 Amazon gift card. Now back to our monthly payers. Smartcentres Real Estate Investment Trust. That never gets old. They paid us $55.19 in distributions. They provide us with 8.5% of our forward annual dividend income. They're trading above their 5-year average yield of 6.2% at a yield of 7.7%. Smartcentres has a 5-year dividend growth rate of 1.6%. They have not increased dividends since before the pandemic. Their AFFO payout ratio is very high at 93.4% as of Q2 earnings. Let's see what happens in September with the Bank of Canada's interest rate announcement. I believe another interest rate raise by the Bank of Canada could push Smartcentres down to pandemic price levels. In any case, with our 3rd monthly distribution, we break $100 to $138.59. And lastly, Riocan Real Estate Investment Trust paid us $65.97. It provides us with 10.1% of our forward yearly dividend income and slowly dropping as we build back our portfolio. Riocan has a 5.5% dividend yield and a 5-year average yield of 5.7%. Its 5-year CAGR on its dividend is negative because of the dividend decrease in 2021 of 33%. However, it has been raising its dividend by 6% yearly since then. As of its Q2 earnings release, it has a payout ratio on AFFO of 59.7%. Riocan has a good program of NAV creation and additional income through its scaled development program, which should allow it to continue to grow its AFFO, which in turn will allow it to continue to grow its dividend. Yeah, baby, that's what I like to hear. So after all 4 paychecks, our grand total is $194.56. That's 4.2% more than May. Our 3 largest dividend payments accounted for $171.56, or 88% of our dividend income for the month of August, which is pretty irrelevant considering only our monthly payers paid us this month. We have built the portfolio with a focus on the quality of the company and dividend growth. We also never want to be too dependent on any one company to help our portfolio grow in the event of a dividend cut. As you can see from the portfolio breakdown, no one industry or no one stock dominates our portfolio. Now, a massive part of our dividend income growth is from the dividend raises we receive. In May, we had 3 dividend increases. But in June, we had 0 dividend increases to report. In July, we had 0 dividend increases to report. And in August, we finally have a dividend increase to report. Capital Power Corp, CPX, raised its dividend 3.5 cents per quarter or 6%, giving it a 10-year dividend growth streak. That added $35.25 to our annual dividend income. So far this year, 11 of our 18 dividend growth stocks have raised their dividend. Other notable dividend increases on the aristocrat list were Jameson Wellness, ticker JWell, a massive 11.8% increase, giving it a 6-year growth streak. OpenText Corp, ticker OTEX, increased 2.9%, giving it a 10-year streak. And Saputo, we all love their cheese, had a 2.8% increase, giving it a 25-year dividend streak. And Popular Bank Equitable Group, ticker EQB, had another 2.7% dividend increase this quarter, making it 7 consecutive quarters of dividend increases. Oh my. And now here's a brief interlude of what we've been up to this summer so far. Our forward annual dividend income is sitting at $7,859 with a yield on cost of 7.3%. We still have $47,000 to deploy this year. Make sure to subscribe so you don't miss our August portfolio update to see what stocks we bought during the month. As we get closer to maxing out our Tfsa again, we expect our dividend income to snowball even faster. Those that follow our channel know that we see our dividends as our little minions that work hard for us so we don't have to. With our minions working harder and harder each year, we can forecast where we'll be in about 10 years. Thank you so much for all your support on the channel, and don't forget to follow us on Blossom with the link below. Until next time, I'm Mr. Financial.